In other business news, 2025 has been dubbed the year of expected gains for the South African economy. Economists say a stable political footing is set to foster positive business and consumer sentiment. Analysts have also noted the expected downward trend in inflation to result in further interest rate cuts. Steady electricity supply is further expected to bode well for economic activity. ESG Analytics Director Sifiso Skenjana speaks to us about this. Thank you so much for your time, Sifiso. Let's first sum up the economic gains of this year. What then warrants that positive outlook for 2025?
Good afternoon, and of course to the viewers at home. What's quite interesting in terms of the year that was is that, of course, in an election year, you often have a bit of an investment stay away at a corporate level. We know that we've got north of 1.1 trillion worth of cash balances sitting non-deployed, in essence, coming from a corporate South Africa. And so that often tends to exacerbate itself in an election year because people don't know what the election outcomes will be. And so I think one of the things that we expected in this year, and it has materialized in what has emerged as downward revisions and growth expectations, is particularly, I think, one, I call it a partial investment stay away, given then, of course, political uncertainty in an election year. And so that's one of the things that certainly has played itself out. It's also played itself out in terms of how corporates have invested from a human capital point of view. If you look at the quarterly employment statistics, QES, that often gives you a view around the number of full-time employees in South Africa vis-a-vis part-time employees. And you're starting to see a substitution effect happening there. And so you're starting to see a lot more employees being switched into a part-time employment point of view. And that's already giving you a view around, in essence, one, that the labor outlook is a little bit grim from an investment point of view in terms of what enterprises expect. And also, I think it is also testament to where we've seen where even at a public service level, we've spoken about wanting to invest into labor-intensive sectors, yet, of course, that doesn't follow in terms of when you look at the money where we go into, particularly, I think, the machinery-led space. In fact, when you look at our labor profile, 76% of our labor force is semi-skilled or unskilled, yet 24% of our GDP comes from financial services sector, which requires highly skilled people. So there's a labor mismatch there as well. And that's also, I think, a story of what the South African economy has played itself out to be from an employment point of view during the course of 2024. And of course, I think when we then look at how do the politics of the day translate into how we reflect from an economic point of view, we're certain that from a GNU point of view, we did see a bit of an improvement in terms of our rand, and we know that we are a price taker. Our South African rand is the 19th most traded currency in the world, and so of course a stronger rand does, I think, create a bit of a relief from an inflation point of view in South Africa. But now, of course, the Trump economics have come into play. We've seen that rand, position weakening, and of course, I think that's been priced into 2025 continued weakening because of what we often talk about as the dollar smile, where money often goes to the dollar in good times or in bad times, and somewhere in between is the dip where some of the emerging markets may see some gains. And so those are some of the things, Dumisang, that have come through in the course of the 2024 year that I think give us a sense around why, from an economic climate, there have been limited gains, and it's been difficult, I think, to find, green sprouts during the course of the year.
I'm glad that you mentioned a couple of the remaining risks from both the local and the global side of the economic landscape. I'm interested in the part around GDP for South Africa. I mean, projections of between 1.3 and 1.6%. What has been described as positively weak? I mean, if we are to use that terminology, how does this then translate into some sort of progression, positivity, and filtering into job creation? It's still too little if I am, to create a scenario that speaks to healthy economic growth that would then have the stability of South African industry creating jobs.
Sure, I mean, positively weak. I think we must all become poets at this point in time. I think it's great English gymnastics about an economy that is in a stagnant environment with still upward risk from an inflation point of view. And so when we look at what are the things that may positively inform any growth in South Africa, like I said, is that if we don't really reimagine what structural transformation from an economic point of view in South Africa looks like, and what structural transformation speaks to is the relative contribution of the primary, secondary, and tertiary sectors to the economy. And as I mentioned, that we're finding a large contribution coming from our tertiary sector, and so we've really got to come out of the State of the Nation address with a vision 2035 that says by 2035, we'd like agriculture to contribute 15% of our GDP. We'd like manufacturing to come back to its glory days where 1996, we had 26% of manufacturing contributing to GDP, and now I think the number is sitting at about 11%. And so 2035, we'd like manufacturing to come back to north of 25%. That kind of dream will also then inform where money goes. It will inform how we think about our investment promotion. And so when we're going to work, when we're doing all the work from an investment promotion point of view, as well as the presidential investment summit, simply saying that agriculture and manufacturing, localized manufacturing specifically, are the things that are going to inform a revitalization from an economic activity point of view. We've seen many years, I mean, I think it's north of a decade now of what we've seen as jobless growth, where we see a little bit of an uptick from a GDP point of view, but that doesn't translate into positive employment outcomes. And so simply it means that there's a structural disconnect from where the economy currently is moving and the way it's supposed to move. And so those are the things for me that would really inspire some thinking around what would be, important tailwinds for South Africa. Of course, we heard China saying that they will do very selected monetary easing next year, and specifically there, I think that's going to have a buoyancy from our minerals and commodities point of view, as well as in global sentiment, because of course the size of the Chinese economy, as of course as the purchasing economy as well, really I think becomes quite important. We're going to need to also think very meaningfully now with all the transitions that are taking place. Electric vehicles, of course, are going to be a pressure point for our manufacturing from a vehicle point of view. Internal combustion engines in Europe, for example, are being discontinued, I think, 2035, but they're pushing for 2030. That means that either we get new buyers from our vehicle production point of view, or we also make sure that our production is fit for purpose in our second buyer. I think the US is the largest buyer from a vehicle point of view, and then I think the EU comes in quite second. And so these are some of the things that need a little bit more intentionality in our investment program when we think about revitalizing our economy for growth into 2025.
Lastly, what could hinder the projected positive trajectory then?
I mean, I think one is we continued weaker state capacity. I think we've spoken, I think, over and over again around the importance in a development state to ensure that you've got state capacity. Quality institutions play an incredibly important role in ensuring that also that you've got enough foundational institutions to be able to support the growth and development of that. I think, again, when we look at from a budget point of view, we're getting into the main budget in February. We're going to need to have an impact-based budget. And so how do we get the most bang for the buck, given the fact that we've got constrained resources, given the fact that our borrowing program continues to be onerous, that 22 cents for every 1 rand of tax collected, it continues to go towards servicing that debt. We've got to broaden and widen our tax base, which means a lot more work's got to be done in dealing with institutional issues at a sectoral level of industry concentration, SMEs not being able to participate. I mean, they employ more than 60% of the people in the economy, yet they only contribute 30% of the economy from a GDP point of view. And so you've got to crowd in SMEs and making sure that they are also able to then assist in broadening that tax base, where only 16% of tax collected comes from corporate income tax. And so these are some of the things that I think can certainly hinder us in our journey. And of course, the GNU pressures from a policy coherence point of view, because parties coming from different corners, it's difficult sometimes for them to align in thinking and in implementation intent. And so those are some of the things we really need to be mindful of as we get into 2025.
Thank you as always for your input, ESG Analytics Director Sifiso Skenjana talking to us about the outlook for the economy in South Africa in 2025.